Hello and welcome to the look ahead for Wednesday, the 22nd of May, with me, Fiona Cincotta, Senior Market Analyst at City Index. So overnight, we'll have the RBNZ interest rate decision. Then in the European session, we've got UK inflation data as well as the Bank of England monetary policy hearing. Then we've got ECB President Lagarde is due to speak, as well as the minutes from the latest FOMC meeting. Then we've also got earnings from the likes of Nvidia, Target, and Snowflake. So plenty to be watching. So let's just start with Nvidia's earnings. Keenly awaited. They come as the share price for Nvidia trades up 100% so far this year, far outperforming the S&P, which trades up around 11% so far. So what will we be looking for? So expectations are for revenue to have jumped by 242% to 24.60 billion, and Q2 sales are expected to rise 97%. So forecasts will also be in focus. And then net income is expected to rise to 12.83 billion, up from 2.04 billion. So these are big numbers that we'll be watching for. And obviously there's been a stellar performance by the share price. So that does mean expectations are really high as well. And I think, the focus will be on this stock to see whether the AI chip maker can really maintain that explosive growth that we've seen so far. Let's just have a look at what's going on in the share price here. So here we can see Nvidia really quite a tremendous move higher across the year, has eased back. It fell back from all-time highs, but it's been grinding higher once again, trading above that rising trend line. It actually trades just below the all-time high. It's trading around the 950 mark as we speak. All-time high up there at 976. So strong earnings, strong outlook. Then buyers will be looking to take out that 976, heading towards the $1,000 a share. Fresh all-time highs. Disappointing numbers and disappointing outlook. Then we'd be watching on the downside for a move around the 882. That's the 50 SMA. Then below that, we've got the 818 level, and that's the May low. So also worth keeping in mind, given the ability of this stock to be able to move the broader market, just worth having a look at the Naasdaq. Now, again, we can see with the Naasdaq in a similar pattern, fell down from those previous highs down to a low at the end of April, and has been trading in a rising channel since then. Just easing back from the all-time high of 18,700 that was reached yesterday. But as far as the chart is concerned, there's still a bullish chart. The RSI is supportive of further gains whilst it remains out of overbought territory. Strong earnings from Nvidia could help boost the Naasdaq and sort of lift that optimism surrounding AI stocks, helping the Naasdaq towards the 19,000 level, which would be the natural target. On the downside, watching out for immediate support at the 18,466. That was the March high. And then below that, 18,000 will come into focus. Now, that's not all that's going on tomorrow. We've got a lot going on. They've also got UK inflation data. Now, UK inflation data is going to be more in focus than it usually is, and that's because this really could be deciding inflation print for the Bank of England, helping them to assess whether to cut interest rates in the June Bank of England interest rate decision meeting or the August meeting. Now, the expectations are for inflation to cool to 2.1% year on year. That's down from 3.2% and is just a breath above the central bank's 2% target. Now, if we get cooler than expected inflation, then that really could sort of cement expectations that the central bank will cut rates in June and potentially further another rate cut before the end of the year. However, if we do see that inflation reading coming in a little bit hotter than expected, then there might be some questions over whether the Bank of England will actually cut in June. Now, recent policymakers have been hinting that we're moving in the right direction for a rate cut this summer. They've said that the figures that they'll be watching are inflation, which is obviously out tomorrow, and also their wage growth. Wage growth has been a little bit stickier than perhaps what the Bank of England would like to see. But still, as I said, after that, policymakers have still suggested that despite the sticky inflation, wage growth data, we are still on track towards a rate cut. So this is sterling US dollar. Other thing to keep in mind, obviously, when we're looking at the sterling US dollar is also the FOMC minutes that we're expecting to be released, but they'll be released in the US session, so a bit later. As far as the pound US dollar is concerned, it's trading around that 127 level at the moment. That's after a really solid recovery from those April lows, but it's just struggling to move much further beyond 127. Now, if we do see hotter than expected inflation data, then that could help the pound break above that 127 as rate cut expectations get pushed back. However, if we do see that the inflation data comes in cooler than expected, then we could see the pound US dollar look to retest that 126.30 level, which is the 100 SMA. It's also a static resistance, the May 3rd high. Below there, the 200 SMA comes into focus, and that's at 125.40. Now, this does, as I said, also depend on what we hear from the FOMC minutes later in the session. The Fed have been very much sticking to sticking to the chorus that they need to see more evidence of inflation cooling towards the 2% level before they start cutting interest rates. Just worth bearing in mind that these minutes could feel a little bit stale, given that they came out, the actual meeting was prior to last week's inflation print, which actually showed inflation cooling for the first time this year. But, if we do sort of get a sense of the Fed being much more hawkish, given the hotter than expected inflation across the first quarter of the year, then obviously that could give the US dollar a boost, which could see the pound US dollar fall lower. Now, also, what have we got? We've got the RBNZ rate decision. Now, they are not expected to move interest rates. So we're expecting interest rates to remain unchanged at 5.5%. As far as the inflation outlook, inflation in the region in New Zealand is still a little bit hot for the central bank's liking. It was around 4% across the first quarter. We've also seen growth slow. But I think given that inflation is still really quite considerably above and the target, we could still sort of hear a hawkish tone from the central bank. Now, again, if we just have a look here, we're looking at the Kiwi US dollar. Again, really solid recovery from those April lows, rising to the highest levels since March at 0.6150. Have since eased off that level, just as we've seen a little bit of US dollar strength. That's coming in. If we see sort of a hawkish sounding RBNZ, then we could see that level of 61.50 taken out and an extension in those gains towards the 0.6220, which was the March high. If we see a slightly more dovish side to the RBNZ, then watch out on the downside for 60.75. That's the 100 SMA, immediate support, rather minor. Stronger support can be seen there at the 60.40, which is not only the 200 SMA, but it's also the February low. So that's what to be watching out for tomorrow. I hope you've liked this video. If you have, then please do press the like button. And if you'd like to receive more videos like this, then please do follow.